Top pick time once again. Tracy, we're going to start with you. You're in the building products area with Lumber Liquidators.
Yeah, these guys are a play on housing. They make the flooring, many different varieties, but mainly wood floors. And after coming out and seeing the Home Depot and the Lowe's excellent numbers, Lumber Liquidators also had excellent numbers this last quarter. Why not stay with the theme of people are remodeling and there's new construction going on? So, I like them. They aren't cheap. They're trading at 36 times. But you're buying the growth here. They're supposed to grow earnings about 60% this year and another about 17, 18% next year. And mainly it's because of this, growth in housing. Now, they just announced that they were going to buy their own East Coast facility. Right now, they're renting distribution. So that's going to, put a little dent into the full year earnings, but it'll be worth it because they're going to be able to lower their costs. And they're also leasing a facility out west, which again will also help them lower costs because right now they're shipping quite long distance to their West Coast clients and those stores and stuff out there. So this is going to cut costs on, returns due to damage and all this other stuff. So Lumber Liquidators is doing some good things in terms of the home remodeling, and it's a name to keep in mind if you don't want to be in the Lowe's and Home Depot area.
All right. Well, Todd tells us the name to keep in mind in the auto parts area is Lear, right?
Yeah, Lear Corporation, LEA is the ticker symbol. Automotive supplier, focused primarily on seating. They do all types of seating, but that's about 3/4 of their revenue. They also have about 25% that comes from electrical power management systems, which is kind of a fancy word for wiring. They do kind of electrical components there. But I like the automotive story here. In the U.S., we're seeing a solid rebound in auto sales from the depths of the Great Recession. And globally, you look at the emerging markets, huge demand for cars. Europe's been the weak spot, but as we alluded to in the last session here, it's starting to rebound a little bit there. So that could help drive global auto demand, and Lear definitely benefits from that trend. They've actually delivered 7 consecutive positive earnings surprise. After their last beat, management raised their guidance for the full year for 2013. Prompted analysts to revise their estimates significantly higher, sent it to a Zacks rank of 1, which is a strong buy rating. Very solid earnings momentum here, good growth potential, and trading at a very reasonable price. They trade about 11 times 12-month forward earnings. So you're getting some value to go along with very solid earnings momentum and very strong growth potential. Could be solid total return potential this year.
What, no dividend?
They do pay a small dividend, yes.
It yields, the guy who wants everything out of his investment.
You get a yield of about 0.9%, so you can tack that on,
All right, Nick, talk to us about Biotech.
Biogen Idec is my pick today. Basically, the biotech sector, I think, is going to be more and more in the spotlight with the big merger that was announced today between Amgen and Onyx. So I think people are going to be focused on it. Now, why do I like the stock? A couple of factors, really. It is seeing tremendous upward revision to its earnings outlook. In the last 30 days, 2013 estimates are up about 9%. And 2014 are up about 17%, so there's this expectation for earnings to improve significantly. And despite the kind of upward momentum in earnings, there's some value. It's actually trading at a PEG ratio less than 1 and below its long-term median. So I feel like you've got strong earnings growth and you've got kind of value. You're getting it at a reasonable price. So I like it for those fundamental reasons. The pipeline is strong. In addition to that, I'm not going to sit here and try to pronounce all those drug names that are coming, but the pipeline, I think, is solid. And I believe that if you're looking at it from a technical perspective, it's in a broad, what I consider to be a consolidation, which looks like it could leg higher. And I think as long as it can stay kind of over the $200 area, that I'm excited about the way it looks technically. And then lastly, if you're worried about kind of all the ups and downs on the Fed and the uncertainty, it's not like highly correlated to interest rates in an adverse way. So I feel like it's somewhat insulated from that, that aspect that the market has been dealing with.
Interesting. Okay, thank you all for that. Don't forget other stock picks that you need to consider, you may want to consider, whatever the case is, get on over to Zacks.com. If you're not there already watching this video, Bull and Bear of the Day are just a couple. Actually, Bull of the Day, stock pick. Bear of the Day kind of warns you about low-ranked Zacks stocks. But there's others there as well for your review. Zacks.com. If you're not there already, check it out. With everyone here, I'm Terry Ruffalo.